Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Russel, who's the CEO of Critical Metals, who are formed to identify and acquire brownfield mining opportunities in strategic metal sector, as defined by the United States and the European Union. Their focus is on near-term production opportunities, prioritising cash flow generation over exploration upside, and where the board believes opportunities have been overlooked and under-analysed. Their primary asset is in the DRC, in the Katangan Copperbelt. Russell's career has been in the mining investment and equity space, working for some of the major global financial institutions. And he's here today to tell us a little bit more about Critical Metals and their story so far. So that's welcome, Russell, to the podcast. How you doing, Russell?
I'm doing great. Thanks for having me, Rob.
No, appreciate your time as well. So, as we always start these podcasts off, I just wonder if you can give us an overview of your career and your background, so our audience knows a little bit about yourself. From feedback, the audience likes this part of the podcast because they actually get to know the guest. Who, if they don't already know you, they get to know the guest. So I'll hand it over to you.
Great, thank you. My background's in engineering. I studied engineering in the United States and did my apprenticeship in engineering. At that time was Garrett Air Research, which is now Honeywell. But I'd moved back to South Africa in 1987 and started my career in investing, portfolio management, which led to the mining part of my career about 1990, 1991 or so. So I've been investing in mines, mostly listed mines, since 1991. And the career has actually been interesting because, in the mid 1990s, we were just coming out of apartheid in South Africa, and companies were held by law in South Africa on the Johannesburg Stock Exchange. They could not list offshore. And I was part of the team at Robert Fleming, or Fleming Martin in this case, that listed Billiton on the London Stock Exchange. It was the first South African company to be allowed legally to list outside of South Africa. And that was in 1997. And it was an interesting experience because, it was the first real taste of what the heavyweight global mining world had in store for me. And the reason why I say that is because the CEO at that time of Billiton was Brian Gilbertson, and the CFO Billiton was, Mick Davis, or Sir Mick Davis in this case. And that's when I had the pleasure of working with, as a junior, with Ian Hannam and Lloyd Pengelly. Ian Hannam, which I'll talk about a bit later, is the second largest shareholder of Critical Metals PLC, and was the chairman of JP Morgan Cazeneux's Global Metals and Mining team. And Lloyd Pengelly was the CEO of JP Morgan Cazeneux's Global Metals and Mining team. So my first taste of really what heavyweights really feel like and what it was like to work with was in 1997 through this Billiton experience. In 2004, I had some unfortunate robberies in Johannesburg. So in 2004, I left Johannesburg and moved to New York and worked on Wall Street. We did Wall Street for a few years when a $3 billion hedge fund came and had me manage their metals and mining sleeve for the metals and mining book and their investments. And so a lot of what we did was in the frontier emerging markets at that point in time. And so, you develop a Rolodex of investments or areas that you think are investable. And I just kept that Rolodex, rolling and growing until I started Critical Metals in 2018. And I relied on that Rolodex in order to investigate some of the opportunities that we have now. So really, we've got almost a 30-year encyclopedia book of opportunities, not only in Africa, but globally from the beginning of the career all the way until I started Critical Metals.
So, wondering if you could just give us an overview of critical metals. And obviously, you said you started in 2018. Just wondering how the journey's been since then.
Well, it was December 17th, 2017. I was in New York City having lunch at the 21 Club. And the person we were having lunch with, there was 8 of us, was General David Petraeus. And he'd come out and said, never in the history of the world has the number 2 economic power not gone to war with the number 1 economic power. And at that time, I thought it was boots on the ground and tanks and missiles. But the reality is it's an economic World War III that we really entered in 2010. And the reason why I say 2010 is because if you think about what China did to Japan in 2010, they shut off the flow of the rare earths and the rare earth supply. So Japan could not develop any of its electronics. And so that was really the shot across the bow that the world didn't acknowledge at the time. So in 2018, in January, I thought about this economic World War III that we were getting ready to enter. And really it is a war of China controls many minerals, 90% plus in some cases, that the West relies on. And should those flow of those strategic or critical minerals stop, you would see the Western economies fold. They would go into recession immediately. And if they had no jobs and the interest rates rose and such, on a 2 sigma or black swan event, you could actually see some type of depression. So we set up Critical Metals to take advantage of that. We're not an EV or a battery metals company. We're a company that's going to supply those minerals and those metals that are critical to driving the UK economy, the EU economy, the US economies and such. And so when I say that, I point it to your mobile telephone or your laptop or your satellites or, industries such as Airbus or British Aerospace, or even to this day, think about Starlink and what Elon Musk is doing. Without the metals that we are going to supply, they would be impossible to succeed. So, we were fortunate enough to find an outstanding copper cobalt mine. It started producing in January. We are ramping up production there, and we have a pipeline of other brownfields M&A opportunities. In fact, I just spent 25 days in Africa with 5 different countries investigating other M&A opportunities. And so we are, in fact, that's what I've been doing. I've been very quiet in the last week or so since I returned because, there's a lot of opportunities out there that we need to try to push forward. And there's a lot of paperwork and analysis and reading and modeling, understanding how the differentials of the prices affects profitability. So that's how the company started. That's where we are today. And I think I've said in the past that we are looking to be in 5 different countries with 5 polymetallic mines in the next 2 years. And, that's still our target. And I think it's definitely achievable. And 2023 is going to be a highly exciting year for Critical Metals and Critical Metals shareholders.
Yes, yeah, certainly. Where do you see the copper and gold markets this time next year?
So we're not involved with gold because it's not on the critical metals list.
I said copper and gold, cobalt.
Yes. So people will think that we're involved with cobalt because of the electric vehicle industry, and we're not. We're involved with cobalt because you need cobalt for your high temperature aerospace applications. If you think about every aircraft engine that, 737 or an Airbus 320 or the Airbus 380, all those engines take a massive amount of cobalt. If you think about the aerospace, again, you think about missiles and rockets and such, again, you need a cobalt alloy in order to deflect the high heat and the high temperature. And one of the interesting parts about cobalt is that, you've got 443 nuclear reactors, new nuclear power plants that are scheduled and planned to be built. And cobalt is an integral part of that building infrastructure. Without cobalt, you can't have a nuclear power plant, which means if you don't have nuclear power, you're not going to be able to hit your green targets by 2050. So we see cobalt dropping as low as $20,000 a ton on an LME basis. It's not a problem. That's really not a problem, and it's not a problem that electric car makers are substituting cobalt for manganese or for nickel or such. It doesn't bother us one bit. We like polymetallic deposits, so for every ton of ore that we hoist, we get paid twice. So cobalt right now is not even in our financial models, and when it does come in, I expect cobalt could be bigger at Malulu in terms of profitability than the copper. So to answer your question, I think cobalt can drop even further. Doesn't bother us one bit. And I think copper could go down to 7,500. Doesn't bother us one bit either. Because sooner or later, you'll see those South American copper mines, or you'll see what's going on in Panama, or you'll see what's going on in Arizona in terms of the head grades. They're decreasing, which means their costs are going higher. And you'll see those mines shut down before you'll see a mine in the Congo, hypothetically, Mululu shut down. So they will close up shop before Malulu will.
Wanted to give us an update on Malulu.
So Malulu started production about the third week of January. It's right smack in the middle of the rain season. So the roads are a bit difficult to navigate right now. So, our target is about 450 tons of copper ore per day. We're under that right now, but we're in ramp-up phase. The rain season will end at the end of March, and we will rehabilitate the roads right afterwards and start drilling. We'll start drilling this month so we can delineate the ore body even further, and obviously work towards that JORC report that we're looking to create in Q2. And we've had on Tuesday, we had 3 buyers on the property looking at the samples and taking samples to run through their processing plant. So there's no shortage of buyers. It's just a matter of ramping up. So we're testing and stress testing the current equipment we have, with the idea that we probably double up on the excavator and some of the other equipment, probably the trucks too, so we can move ore quicker from the ore body to the stack.
And when do you expect to start selling your product?
Well, we could have sold it already. The idea is really to not be a seller of ore, but to actually do value-added process. So, we've got over 2,000 tons sitting in stockpile right now. We'd like to sell in lots of 3,000, 3,500, because that's roughly 100 tons of copper cathode on the back end once you process it. Obviously, it's grade dependent. So the idea is to get to a steady state of 10,000 tons a month, and then sit there and do that for a few months and say, okay, how do we get it from 10,000 tons a month to 20,000 tons a month? Do we need to widen the roads? Do we need more excavators? Do we need more trucks? Do we need more personnel on the ground? So we've been very deliberate during the rain season and slowly ramping up. But I believe that we'll be able to meet and beat our targets by the end of April, by the end of May, probably. We should be at 10,000 tons a month.
Can you talk through the acquisition of the final 21.5% of Medini Occidental, and what was the reasoning for this?
Sure. So it was the final 43%. So the original transaction was that Critical Metals purchased a controlling stake, which was 57% of the Mauritius Holding Company. And the Mauritius Holding Company owns 70% of Malulu. And on a see-through basis, that's 40%. And the other 43% were held in equal amounts between Medini Minerals and myself. And optically, it looks bad that I was an owner of the Mauritian Holding Company. And I had shareholders come to me and say, look, it looks bad. It looks like there's potential leakage. Sort it out. And ideally, we did. So the purchase price, which the market doesn't appreciate, was on a PE of 0.3 times. So what that means is for every $1 million that cash flow goes through Medini Occidental, which is the Mauritian Holding Company, we really only paid $300,000 for it. So it's highly accretive to shareholders. And once we start generating profits, they will see that it was a highly beneficial transaction for the shareholders. So the purchase of the 43% of Medina Occidental Mauritius that wasn't held was 1.3 million pounds. So, if I've just told you it's on a PE of 0.3, it tells you what should generate in the first full year of operation. And so we tidied that up. Now we own and control 70% of Malulu, and Malulu can be highly cash generative. It will be highly cash generative on the copper side. And the beauty that shareholders and ourselves are getting our grips around is understanding the potential of the cobalt. And we actually took 10 cobalt samples yesterday, day before, for analysis, and I hope to have those released in the next 30 days or so into the market via an RNS.
Obviously, you mentioned that you've just recently started production. What challenges do you see ahead and for the sort of remainder of the year?
Well, so we've RNS that we're looking to do for the first 12 months, 120,000 tons. We can hit that target. That 120,000 tons will be highly cash generative to the shareholders. We get 70% of obviously the earnings on that. Our local partners get 30. We will take part of that and reinvest into drilling and to delineating ore body. We will use part of that for more M&A. So, future M&A either in country or in the neighboring countries. I think shareholders will be pretty pleased on what potentially is coming down the road. And then I think we need to be a beneficiator of materials. So we don't want to sell ore. We want to actually sell cobalt hydroxide and copper cathode. So we would look at either building or buying infrastructure. And when I say infrastructure, it's a processing plant that would allow us to process our own ore. And watch the space. This has been on the cards now for months on end. What's most important for shareholders is to see Malulu get up and running and producing and cash flow generative, because once that happens, the banks all come and say, "Hey, look, don't you need some money? We see that you're up and running and you're making profits. Can we lend you some money for a second or third transaction?" And that's exactly what's happening. I had a call this morning with a Pan-African bank. I had several meetings with various banks while I was on my trip, saying, "Hey, you guys have done a good job getting this up and running. We want to be involved with your journey, and we want to see if there's any type of project finance, corporate finance, that we can do on your future acquisitions." So it's actually a pretty exciting time, and I've been very quiet the last week or so because I've had my head down in some of the potential contracts and financial models and such on what's to follow from Malulu.
Why don't you just tell us a little bit about the management team and obviously
Sure.
the main people involved?
Sure. So John Kreff is the mine engineer. He's kind of the captain or the fly half of the team down there. He's an experienced 35-year mine engineer. He's got experience in Congo. He's got experience in Central African Republic. He has experience in Rwanda. He has experience in the Republic of Congo, in West Africa. He's a South African mine engineer. And then we have Lloyd Kirtley, who's the project stroke field manager. He does everything that has to do with the camp and the HSE and compliance and making sure the fuel is there, everything that one would need in order for camp support. Also South African, also a mine engineer, and he's done a fantastic job. And in fact, we had a military person at the camp in early February, and he said that this camp at Malulu was built to as high a standard, if not higher, than any military camp that he'd seen in his career. So they've done an excellent job. We have 3 geologists on the ground and another mine engineer. We try to hire local, so we only have 2 expats, and it's not our intention to have any further expats. There's University of Lubumbashi puts out very talented individuals. In fact, I was on the phone to a chemical engineer this morning, and he's great. And so there's a plethora of talent in the region, particularly that mining is in the DNA of the Katangan province there in the Congo. So we've got a camp that's built for 23 people, and we're getting ready to, I think the last 3 people arrive here towards the end of the month. And when I say arrive, it's obviously locals, but we need people on the ground as support. So up to 23 people at the end of this month. We've got equipment that we lease. We don't own our equipment, so if it breaks down, they have to turn around and replace it. So it keeps the costs low. We'll look at owning equipment here, in a year or two. Maybe we can get Caterpillar or one of these firms that could do in-house financing. But right now, we've tried to keep the cash burn low while ramping up on the production. And we've got the people on the ground that have succeeded in doing this.
For our listeners that are listening, if there's any that are looking to invest in certain companies, why should they invest in critical metals? What would you say is probably special about yourself, your sort of unique selling points, and why someone would invest their capital with you?
Well, I don't know any other junior that's been put into production and soon in profitability as quick as we have, number one. Number two, we keep a grip on the number of shares in issue. We've got 59 million shares in issue. We're not like other businesses where they sprinkle around shares like pixie dust and reward everybody with these free options and free shares. Not one of our shares that I have that I've gotten for free, and any warrant package that I have comes from, I have to pay for that after tax capital. And that's the same with the rest of the board and anybody else. That we don't have any options. There is no option scheme, so we're well aligned. When we buy a share via a warrant exercise, or whether we buy on the market, it's alongside the rest of the market. And I hear a lot of stories about CEOs say they're aligned with shareholders because they've got shares. Those shares are free, right? We don't believe in free shares. We believe in the kind of the Bitcoin thesis, and that is there's a finite amount of shares. You must covet these shares as treasure. And Warren Buffett was the same with Berkshire Hathaway. He doesn't do share splits. He keeps it at $200,000, $250,000 a share, because you want to covet that equity holding. So when I say that management's aligned with shareholders, we are truly aligned. We have to write checks from our own post-tax capital. I guess the third point is we're on a pretty aggressive M&A pathway, and the transactions we're looking at are all in production. One of them's could be in production in 6 months, but the other 2 are all producing, I bet, at a small scale. So what happens is you don't have to worry about a delay in profitability or cash flow from the investments that we invest in. So I think that there's 3 good reasons right there why the market actually should look at their company. We've promised that we'll be in cash flowing situations within 12 months or less. And with Malulu, once we listed on the 20th of September 2022, it was 5 months later we're starting to produce copper for the market.
And lastly, what's the outlook for the remainder of the year for critical metals during 2023?
Well, it's, as I mentioned earlier, it's going to be a highly exciting M&A journey. To hit our target of 5 operating mines in 5 different jurisdictions in 2 years, we need at least 2 transactions this year, if not more. And so I would expect shareholders to wake up one day to an RNS that another mine has been acquired, infrastructure has been acquired, something else has been acquired, and we won't have to pass the hat to shareholders to fund it. We'll fund everything either via bank debt, because we have no debt on the balance sheet, or we'll fund it via internally generated cash flows. So, the benefits to shareholders are that the share count keeps tight, the profitability is there. And, our second largest shareholder said, in 2 years, you really need to start paying a dividend because you'll be generating so much cash. So, I think that 2023 is going to be really exciting. Watch this space.
Russell, really appreciate your time. Thank you for giving us an update and your story with Critical Metals. It sounds a great project. You're up and running, and the future obviously looks bright. If our audience wants to reach out to you, if they have any questions, they want to follow your story, how can they go about doing that? What social media platforms are you on?
So we're on Twitter, and we're pretty active on Twitter. The website criticalmetals.co.uk. If you wanted to get a hold of me, you could go in there on the box and say, I want to get a hold of Russel Fryer, and they'll forward it to me, and then I'll reach out direct. I have daily interaction with shareholders. Some of the things I can't talk about, some of the questions are easy to answer, but I welcome shareholder engagement. So, and then I'm going to be in London March 20th to the 31st. So if somebody is not a shareholder but is interested in the story, wants to get together with me, I'll make sure I set aside time to tell the story and go over basically what I've told you. There are reports on the website, Competent Persons Report, obviously the readmission prospectus. There are 2 analysts writing reports as I speak, so hopefully there'll be some type of sell-side research report coming out. That'll help the market. And you'll be able to get a hold of the analysts and ask questions there if you don't want to ask me questions. But we're pretty user-friendly and shareholder-friendly. We treat all shareholders the same. The way we would want to be treated is if we were retail shareholders. So by all means, reach out to me via the Critical Metals website, criticalmetals.co.uk, and I'll get back to you.
Yeah, great. We'll include those in the show notes accompanying this episode. So for easy access that anyone wants to reach out to you, they can do so. And as you mentioned, you're going to be in London later in March 2023, which is a few weeks from this recording. So yeah, those that are listening, please reach out to Russell if you've got any questions or want to know more about potentially investing in the company Critical Metals. Russell, really appreciate your time. All the best for 2023. Probably catch up with you in London myself as well. And for those that are listening, appreciate your continued support. Please share this episode amongst the mining community. But as I've been saying, I want the podcast to be shared not just amongst the mining community, but people outside of the mining community. We need to improve the image of mining around the world. So your continued support, your continued sharing of this podcast and these podcast episodes may help turn that tide. It's obviously a big journey, but every little bit helps. So appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.